How to trade options on Webull in 7 minutes. Jumping into the app, click on any tab at the bottom of the screen with the search bar at the bottom to pull up stock. For this example, we're going to trade options on Nvidia, so I'll type in NVDA, then select it from the list. Once you're brought to the stock page, to access options, click that button at the bottom of the screen or the button to the right of chart. This page is known as the options chain. Now this is going to look really confusing as a beginner, and that's completely okay. By the end of this video, you'll know with confidence how to trade options on Weeble, including everything you need to know about this screen. To trade options, you'll first need to sign up for Weeble and open an account. For a limited time, you'll get 3 to 20 free fractional shares of stock for signing up, opening an account, and depositing. If you like Weeble, I've left a link in the description and comment section below, which will take you directly to the sign up page where you'll get those free shares. So first, what even is an option? Think of an option like a house you're interested in buying that's currently priced at $300,000. The problem is you're not quite ready to buy just yet, and you're confident that over the next 3 months, the value of that house will rise well above $300,000. You could then say to the owner, I'll give you $5,000 right now for the right to buy this house at any point in the next 3 months, even if it goes much higher. So if the homeowner agrees and you pay them $5,000, you now have a contract that gives you the right to buy that home for $310,000 at any point over the next 3 months, even if it were to rise much higher, like $400,000, for example. And you're paying that $5,000 because you're confident the price of the home will rise in the next 3 months, and you want to lock in a better price now. Options work the same way. An option is a contract that gives you the right to buy or sell stock at a specific price on or before a specific date. In the options world, the $5,000 payment you made for the right to buy the house is known as the premium. The $310,000, the price at which you have the right to buy the house at, is known as the strike price. And at the end of that 3-month time frame where you can buy the house at any point is known as the option expiration date. Okay, so there are only 2 types of options you need to know. Number 1, calls. These give you the right to buy stock at a set price. You'd buy a call if you think that the price of a stock is going to go up over a specific period of time. Number 2, puts. These give you the right to sell stock at a specific price, and you buy a put if you believe the price of a stock is going to decline over a period of time. And that's it. Calls for up, puts for down. Back on the Webull options chain, let's place an example order to buy a call for Nvidia stock. To begin, at the bottom of the screen, you'll be able to have Webull display calls, puts, or both. It's much easier to focus by just displaying one or the other, and since we're buying calls for this example, we're just going to have it display calls. Now each row you see here represents different expiration dates, or the dates that an option contract will expire. You have 6 days, 12 days, 20 days, and so on. For this example, let's say that you believe Nvidia stock will rise over the next 34 days, so we'll go ahead and click on that row. Within the dropdown, each of the rows you see here represent different option contracts with different strike prices that you can trade. So on the far left, you'll see those different strike prices: $99, $98, $97, and so on. If you look at the center, you'll see that the current Nvidia share price is $94.31. Everything above that represents strikes above the current share price. Let's go ahead and choose a strike price that's close to the current stock share price. So over the next 34 days, let's say we believe that Nvidia will be well above $99 per share. So we're going to try to profit, and we'll go ahead and click on that contract. You're then brought to the order form where we can start with the order type. But let's leave this as a limit. Next is the limit price. This number here represents the premium. You can set this to any number you want, but the closer it is to the mid price, the faster your order is likely to go through. Now, if you're taking notes, you'll want to write this down. Option contracts represent 100 shares of stock. So while it says that the premium price is $6.60, we actually have to multiply this by 100, so the total premium would actually be $660. Next is the number of contracts. Let's leave this as 1 because we're already going to be paying a $660 premium. You'll then see the estimated order total at the bottom, which is $660.06. Then you'll see the estimated transaction fee. Now, this is not a fee that Webull collects for their own good. They're required to pay this to US regulatory agencies. On Weeble, there are no contract fees or commissions for trading options. Next, you'll see buying power used, which is that 660. Then you'll see option available buying power. Now, I don't have funds available to trade options in this account right now. This will need to be more than the order cost itself if you're placing a live trade. You'll then hit buy at the bottom and Weeble will display a summary of your order. You'll just want to verify that the number of contracts and the price is what you want. Now, this is just an example and the stock market is currently closed. To trade options, it has to be done during regular market hours. And if this were a live trade, all you would do is hit confirm and it would submit for execution. If you're taking notes, you'll also want to write this down. You don't have to hold your options until expiration, and you actually never have to handle the 100 shares. You can trade the option contracts themselves to profit. If the stock price moves in your favor, your option contract will become more valuable, allowing you to trade it to lock in profit without you ever needing to touch the 100 shares. Now, if the stock moves against you, you can trade it at any time to limit your losses. You could also hold it until expiration, and this is what we call an option that expires worthless. So in this example, you would lose your entire premium because you were wrong about the direction of the stock. Now, what if there were a way to trade options and make every mistake in the book without losing money? Thankfully there is, and it's built right into the Webull app. With paper trading, you can practice buying and selling stock and options 100% risk-free. It's a simulated account where you can start with as little or as much money as you want and practice trading contracts, testing different strategies, or getting comfortable with Weeble itself. This is the #1 best way to get started as a beginner. Now, most people lose money trading options, but what if there were a way to flip that? Instead of paying premiums, you're earning them and you're doing it with way less risk. You can, and what we talked about in this video is just the beginning to what you can do with options. In this video here, we break down a lesser known strategy the wealthy use to accelerate their investments and income, and we can too without being rich.